General update for the 26th and 27th of November, and it's been a fairly nasty week on global stock markets, with the US market being down for 7 consecutive sessions now, and I think we're probably pretty close to a bit of a relief bounce in the market, so we'll have a look at that in a minute when we have a look at the actual charts. But just a reminder, this is general advice only, as always. Now, a bit of a summary of the action for the week. The S&P finished 4.7% lower on the week, so it wasn't a disaster, but it wasn't particularly pretty, and is currently resting right on the 61.8% level exactly. So another reason why I think we might see a bit of a relief bounce in the next few days. So for me, I would see that as a bit of a B leg upwards and then more downside. I still think there's a chance of a Christmas rally, but there is so much fear in Europe with the bond markets that it's really overriding the normal seasonality that we'd be seeing at this time of the year. We have weakness through August, September, some strength in October, which can quite often be a negative month, and then the normal positive November, December has kind of been turned upside down, perhaps by the strength of what happened in October. The ASX 200 closed down 4.6% on the week, so almost mirroring what happened in the US. And our market's now oversold, but look, in this market, that means absolutely nothing. The price could stay down or could go even lower. Gold closed $33 lower for the week, and really the impact there is money's flooding into the US dollar as a perceived safe haven. So gold and silver is a little bit weaker just because of that currency effect. Gold is close to several support levels. We'll have a look at that. My view on gold still hasn't changed. This is on a big picture level, is a large triangle that I think will almost certainly resolve to the upside, but it may just take a little while longer yet to complete that pattern. So there is a long-term support line which currently kicks in at about 1580, which is about another $80 or so below where we are at the moment. But I don't think there's too much more downside in gold. Silver was 3.8% lower on the week, and proven to be a bit more volatile than for gold. And of course, the Aussie dollar was down quite sharply, down to 97 cents during the week, with the rush of money into the US dollar. So I just thought I'd just have a quick look at the S&P on varying time frames. So big picture view, and we'll look at this on the chart in a minute, but for me the big picture is we're in a bear market. That bear market started in April of this year, and it's probably going to last at least another 2 to 3 years. Now that doesn't mean we're going to get continuous decline for that period of time, or even a decline that's massive. In fact, some bear markets can be really just almost sideways, but fairly volatile. The next 3 to 6 months, so zeroing in a little bit closer, I really think at this point it could go either way, and it could be potentially a major move either up or down, and that will be largely dependent on what the ECB does, the European Central Bank. If they go to printing money, which I believe is inevitable, then stock markets will rally enormously. You'll see a staggering rally. Now the question in my mind is, I think they will eventually have to do it. If they did it soon, then markets would rally along with that. If they hold off until the last minute, which is probably what's going to happen, then we could get significantly lower markets first, and that would then force the hand of the ECB and to go to money printing, and we then get an enormous rally from that point. So the next 3 to 6 months is really in the hands of the politicians, and anyone that reckons they know which way the market's going in that time frame is kidding themselves, because it really is going to be politically driven. Now looking at December, I still think a Christmas rally is possible. It'll be a bit volatile, but I still think we might get another couple of weeks of rocky markets, but then the last few weeks of December probably positive. And then zeroing into the nearest time frame, the next week, I really expecting a relief rally. Markets are oversold, 7 sessions down in a row in the US. We haven't seen that for a long time, so I think expect a relief rally in the next few days. So just the overall strategy with respect to stocks, I'm really looking to short sell this relief rally, particularly some of the stocks that we've been looking at through the membership in the US. And then if we do get the C leg play out as I expect it to, then I'll be looking to buy any kind of panic sell-off that we get and strong reversals, particularly in some of the small cap stocks. So let's jump over to the charts now, and we're going to do something a little bit different this week and start with the Shanghai Composite, the Chinese index, because that's obviously for us is very important what's happening in China. You can see there's been a very clearly defined trend channel to the downside, and that was only broken just marginally. Zeroing in a bit closer, you'll notice a wedge pattern formed here between about mid-August and the end of October. The market broke out of that wedge pattern, went up to the top of the bigger trend channel, managed to break it just a little bit of a false break, and now it's come back down again into that trend channel. So at the moment, all you can say is that Shanghai index is still in a downtrend. We've got very important support here at 2320. If that breaks, then I think that would probably signal a fairly negative move on our market. So next I would like to have a look at the S&P index. So let's just pan back and look at the big picture. You can see, to me, from March of 09 to April of this year was a phase 2 market. I think we're now quite clearly in a phase 3 topping pattern, and so this is all consistent with a bear market over the next couple of years. But zeroing in, you can see we finished on Friday night at 11.58, which was exactly the 61.8% retracement of this run that started on the 4th of October, pretty powerful rally, and topped out on the 27th of October. We formed up this triangle, which normally would resolve to the upside. This time it didn't, and it broke down, and you can see 7 sessions in a row to the downside. The RSI is now getting reasonably oversold, although it's not fully down under 30 yet, so it's not necessarily the ideal buying point. And so I think what is likely is that we will get a relief rally. So this leg here, which I'll mark as, this is the B leg, perhaps back up to around the 1180 to 1200 mark, and then probably a C leg down to a lower level. Now the levels that I'm looking at, there is an extended Fibonacci retracement level down at 1123. It's not one that I use, but it's one that some technical analysts use. So that would be an area to maybe look for a bit of support. Below that, 1075 would be the next support level. And if things got really nasty, let's pan back and look at the bigger picture retracement, and that is from March of 09, and those levels would take us down to 1018 or possibly even 936. So they're the levels to look for as support on the S&P. So just to recap, I think a near-term rally, perhaps for a few days, maybe a week, starting on Monday. A C leg down to complete this part of it, and then perhaps some kind of move up into Christmas, and then running into next year. It's really in the hands of the politicians as to what happens. Let's have a look at gold. Now we'll start with gold first of all on a weekly chart. So you can see here we've got a very strong trend line that started in October of 2008, and you can see that the gold price has basically stayed above this green 30-week moving average, which is the equivalent of 150-day moving average, only just the odd brief excursion below it, but no closes below it. So that one is running at the moment as support. You can also notice that we've got a symmetrical triangle has formed up here, and that normally is a continuation pattern. So I'm expecting that we might get a few more weeks of this choppy up and down action in the gold price, and then perhaps a breakout to the upside from that pattern. At the moment, this trend line is giving us support at just under $1,600. So we've got several levels of support between 1,600 and the current level, which is about 1,680. So that's gold. We'll look at gold then on a daily chart. So zero in a bit more, and you can see here I've marked out what I think is an ABC pattern to the downside. This was the A leg, which was 4 or 5 solid days down. We've got a little bit of a kick that we got last week, and I am expecting maybe gold to come off a little bit more before we complete this big picture pattern and we get back into the uptrend. Silver has been more volatile, but it's following a similar kind of pattern. This is our A leg down, B leg back up, and we're currently in the C leg on the way down. It closed at 31.09 on Friday night, and I'm really looking for an entry somewhere between maybe $27 and $30, somewhere in this range. I think would be a good long-term entry for silver. Let's have a look at the Aussie market now. That's the weekly chart, just to give you a bigger view. It's been more sideways than the US. Didn't go up as much, hasn't gone down quite as much. And just looking a little bit closer on the daily, you can see we certainly had a fairly nasty week last week. But it's getting down pretty close to oversold. The RSI is down at 32 now. So we'll just follow along with whatever the lead from the US is, but I wouldn't be surprised to see a bounce up here of maybe a couple of 100 points over the next week or so. So that's it for this week. The general update. We'll just have to wait and see how markets play out, but I'd be hoping that we might see a bit of relief in the next few days. So that's it for this weekend update. Talk to you again next weekend. Cheers.